guys, welcome to Macro Insight. This is my weekly call where I take you through my thoughts on all of the different asset classes out there, which trades I'm looking at, what the main market drivers are and narratives, and how I'm risk managing my positions. If you haven't already signed up to your free 1-week trial, please visit the website link in the description to this video, and that will give you access to the live call with me, and that takes place on Tuesdays at 2 p.m. London time. Hopefully I'll see you there next week. So today is the 20th of October, and let's take a look at the charts. So we'll start off with, as we always do, equities. So I mean, the main drivers right now on equities, it's all about the stimulus headlines, right? So we bring up the NASDAQ. We had a bit of a rally, obviously into the end of last week, and then we sold off, and we're sort of bouncing around now on stimulus headlines. So what 1 minute you get Pelosi saying that a deal is not imminent and the market sells off, and then Mnuchin says that there's some progress, and then it rallies back again, right? So it's kind of, all it really does is present day traders opportunities to trade, but it's not really helpful. Yeah. So the final presidential debate is happening this week, I think Thursday, Friday. And the last time we had a debate, obviously one of them was cancelled because Trump got COVID. But the last time we actually had a debate, after that debate, Biden came off relatively okay and his odds increased. That was kind of the way the market kind of priced after that debate and his performance. But the truth is, you know, we all know that some kind of stimulus will need to be passed regardless of who wins, right? So given the political back and forth, it seems like a deal before elections is unlikely, but the markets seem quite ready for that, right? So the markets haven't completely fallen out of bed. And so I think the reason for that is because markets know that whatever happens, when we are going to need a deal, the economy is not strong enough to recover in its own right. People will need the checks, businesses will need support, and it's just a matter of time for that to come through. And it's just a matter of how big that stimulus bill is going to be, right? Is it going to be in the kind of high ones, or is it going to be in the high 2 trillions, basically? I think that's kind of what the market's getting comfortable with the idea of, which is why, even though, yeah, you get some to and fro in the market, you're not getting really a very dramatic sell-off in the market happening, okay? If we do obviously see a blue wave, as they call it, where Biden wins and the Dems get the Senate as well, then that will most likely be taken very well by markets, particularly in the harder hit sectors like the mid caps, and maybe the banks will rally as well, because the idea there is you're going to get a bigger stimulus bill coming through, which is what the Dems have been shooting for, and therefore some of those harder hit sectors are going to get more support. Yeah, so kind of the real economy, Main Street, is going to benefit more maybe from that scenario. And the market will, so the market will price in like a stimulus bill of something like 3 trillion, and maybe even more to come next year if needed. Yeah, so that's how the market will probably take a strong Biden victory. Right now in terms of the votes and whether it's going to be contested and the counting and things like that. So Florida has already started the mail-in voting. Yeah. And that is actually one of the swing states in terms of where the polls are quite tight in that state between Trump and Biden. So it's going to be an important battleground state, that one. And there is a chance that if Biden can kind of get a good result in some places like Florida, I think Arizona was another one, if they can do that on the night and win convincingly, then the idea of a contested election kind of gets taken out of the market, right? So whereas I had mentioned, you know, this VIX term structure, having this kind of kink up in the November VIX is reflecting the idea that you're going to get more uncertainty lingering post-election. Well, if Biden wins in the swing states strongly on the night, then you're not really going to get that, because Trump's not going to really be able to contest it. And then the market will very quickly price in that we're going to get a big stimulus coming through. And in that case, vol's going to come in hard, right? So the VIX sitting up there in the high 20s is going to start attacking the low 20s, and maybe even into year end could even go sub 20. So that's kind of what I think would happen in that outcome. On the other hand, if Trump, is in front on the night, and we know that many of the Democrat voters are mail-in votes, then we could see the result being delayed for some weeks. And the markets could experience some volatility on this. So I don't think markets will completely crumble, because I think Trump has always been very market friendly and will do what he needs to do to prop up the economy, and the market will feel that way. But it's just that because we have rallied on this optimism of a potential blue wave and massive stimulus, some of that gets unwound if you have Trump looking like he might have won. He's got his kind of trade tensions with China will be ongoing. So there are a few negatives maybe that come back on that side of things, right? But it's not a complete deal breaker for the market. I don't expect the market to crash or anything like that. It's just maybe you don't get that really reflexive kind of rip in the market that you might get in a blue wave scenario. And that's certainly how the price action has been, right? So bottom line, it looks like the market's going to rally either way into year end, but we might get a little mini shock first if Trump does better than expected on November 3rd, right? And then finally, let's not ignore the impact that any positive vaccine headlines may well have, right, to spark a rally into year end. Yeah. So it feels to me, price action, the way the market's reacting to the election probabilities and the betting odds and what's going on, it looks like we are setting up for some sort of rally into year end. Whether it's, like say, a blue wave scenario, whether it's a vaccine headline that brings more optimism on the kind of the economic recovery standpoint, but it does feel very much like that's what we're setting up for to me. And that makes being short things like value stocks quite risky, right? So being short the mid-cap sector is a bit risky. I've actually trimmed some of my shorts there. I added some shorts and then it came off a little bit, so I unwound them. So I'm not very big on that short anymore. And I'm starting to think that might look quite risky going into year end. So I may even close that out completely before the actual election. Okay. The dollar continues to obviously drive risk sentiment, particularly in commodities. So after bouncing, we bring up the dollar chart. After bouncing and making like this kind of higher low, sorry, a few people started to talk about the dollar maybe, it is going to stage a more meaningful rally, but now we've turned south again. Pretty much, I think, on the back of optimism on getting some sort of stimulus done. So that's taken the dollar back down. Until we get a clear break of 92 in the DXY, I think it's noise really, right? So kind of in that 92 to 94 range, it can do what it wants, and there's no real clear signal either way, I would say. If it rallies, I could see it getting to as high as 96 maybe, if it stages a decent rally, and that's possible if Q4 turns into a bit of a mess, and you get poor economic data, you don't get a stimulus come through, things like that, looking less and less likely in my view. But like I said, I'm not going to get super bearish on the dollar until we break 92. Yeah. Then gold is obviously the next thing to talk about. So I talked about this kind of triangle formation and this coiling price action. It's amazingly still managed to stay within that range. So the triangle keeps getting narrower and narrower, and gold just can't break out of it just yet. So for now, nothing to do on gold. But at some point, I mean, if you look at where this triangle intersects, it's basically saying the triangle is going to intersect it around the election date. So it's almost like gold's waiting for the election to decide whether to break this triangle to the upside or the downside. Yeah. So, watch this space. I still suspect a break happens to the downside in gold. But you never know, right? I mean, ultimately, we know the stimulus is getting done and the market's going to need stimulus for a while to come. So longer term, gold's going higher probably on that. But just looking at the charts, I kind of fancy a move to the downside as being the more likely one on the chart, but that remains to be seen. Yeah, I'm still running my core long position in my pension. I'm also still holding on to some puts, and if we did get that break lower out of the triangle over the next few weeks, sort of around the election, then I'd look to roll my puts or just take profit on my puts, depending on how far the break of the triangle got us down to, right? But for me, 1820, 1830 first target, and then that 1760, 1770 area for the second would be what I'd be looking for as a break to the downside on this. Now, if you think about what narrative could create that break to the downside, I guess, yeah, only really if it looks like stimulus isn't getting done, maybe we get a break to the downside on gold. Maybe some sort of move in real yields going up. But what's really going to trigger that? That's a tricky one, right? So I think, yeah, the obvious thing would be stimulus doesn't get done and risk assets all come off and gold comes off with them. That's probably the scenario that takes it down. Yeah. But equities doesn't really feel like it's pricing that scenario, right? So remains to be seen. Bitcoin seems to be having a little bit of an uptick here, despite gold and silver. Well, silver obviously is doing okay, but gold being a bit sluggish. Bitcoin, trying to have a go at threatening these recent highs around the sort of first 12,000 and then 12,500 levels. So literally that's happened over the last couple of days, this rally from 11.5 to 12. Yeah, if this thing takes it out, I mean, there's room to run for sure, right? So there's room to get to like 14,000 if it decides to have a proper go. We know what Bitcoin's capable of. What's driving this? I mean, there's been quite a lot of chatter about central bank digital currencies being the future, right? Now, I don't know, some people would say that, well, that would mean, people would just use those and wouldn't use Bitcoin, but that doesn't really seem to be the argument at play here, right? It's just like, if all central banks adopt sort of digital currencies, then it just means Bitcoin's just an alternative digital currency that isn't kind of controlled by any central bank. So it does make it more attractive. So that seems to be driving that price a bit higher at the moment. And that dynamic may well continue. So something to keep an eye on, but watch for an aggressive break of 12 and 12,500 in Bitcoin, because then it could do a pretty quick move to 14,000, I suspect. Yeah. Okay, so that's Bitcoin. Then, the last thing, I'm just going to quickly talk about VIX again, being elevated at like around 30 here. But if you look at realized vol, it's more like 2021, right? So there's a massive vol differential here, like a 10 vol differential between what we're realizing and what we're implying, and it's all because of the election. And for me, there is clearly, there's an outcome where the election, you don't need to rally that hard on the election, or you get the election dates pass and the market's still figuring out what that means. It doesn't really know, or, the votes are still being counted. So you might have a situation where, vol just doesn't materialize. The vol that's being priced in doesn't really materialize, right? People are too scared to sell the vol. That's why it's inflated and it's pumped up here. But I actually think selling vol is probably the clearer opportunity right now when I look across, just only being long or short directionally on things versus where vol is. I think vol is feeling quite expensive, particularly in equities. So, the way I've played that is I have done some short vol structures in my options book. I've done a November iron condor, where I've basically sold a put spread on the S&P, and I've sold a call spread on the S&P, and they expire in November, a couple of weeks after the election. And I'm basically playing the idea that, it's not actually going to necessarily be that, unless Biden gets the blue sweep, and then we probably do rip, and it would just go through my call spread strikes. I think the other scenario where the market's kind of chopping around but doesn't really know where to go, doesn't need to absolutely collapse to like 3,000, but can drift lower, or or can stay relatively optimistic as a Biden win gets priced in, but slowly rather than just instantaneously, I think in that scenario, vol's going to come in quite hard. So I think there's premium to be earned there, which is looking relatively expensive. Yeah. Another way of playing the sort of vol reset, as these things are called, is to do trades on the VIX. So, you know, you can buy put, if you look at where December VIX is, it's at like 29, and then January's at 28.5. You know, in a normalization of the curve, December VIX is going to go sub 25. Okay. And there'll be like an upward sloping term structure between December and January. So, you know, you can play that collapse in vol by kind of being short December VIX and being long January VIX. I think that might be a reasonably decent risk reward trade there, basically. So those are two sort of vol fading trades that I'm looking at and what I'm doing. Not quite as straightforward as just trading straight CFDs or futures, but for the people who want to get involved with trading options and trading vol, something worth noting. Thanks so much for watching, guys. If you enjoyed this video, then we'd love to have you join our Macro Insight community. Just visit www.options-insight.com and sign up for your free trial to our live and interactive weekly macro call. If you haven't already done so, please subscribe to our YouTube channel. You'll find more market updates, class highlights from our summer academy, and also video tutorials on anything from options basics to market making fundamentals. You can also connect with me directly. I'm on LinkedIn, Twitter, Facebook, Instagram. You can follow me on any of those platforms. Or alternatively, feel free to send an email to inquiries@options-insight.com. Thanks a lot.